We had a nice bull run over the past few weeks, but the market is succumbing to a bearish sentiment yesterday. What do you think dragged down on the index?
I think yesterday was entirely down to Mumia sugar, which went ex-dividend, and typically, as it's wont in a frontier market, the downdraft overshot the dividend value by quite a margin. The dividend was worth 50 cents, and I think the share fell 80 cents. We normally get this sort of knee-jerk response, but Mumias basically took a huge chunk out of the index. And had we not had such a big move, I think we would have probably edged higher, because the big banking stocks have been quite firm, notwithstanding the big rate hikes. And overall, the market seems to me to be thinly supplied. And, you know, although it can be pushed lower, I think on balance, it's probably trending a little bit higher from here.
If I'm not mistaken, the sentiment around the banking sector appears to have turned. We had big caps like Barclays, KCB, Equity all ending in a positive territory yesterday. So it seems that investors are still buying the banking story, even though interest rates are rising. I mean, Standard Chartered up to 23%.
Yes, no, that's quite a sticker shock, and I think, you know, it's going to be highly problematical imposing these kinds of interest rates on their customers, because you know, to move from around 14 to 23% is no small move, and it's essentially blown up, I think, a lot of business plans and projections. I think what happened with the banking sector, it was deeply oversold. It was, you know, it just fell. For example, Barclays fell in the second quarter. In the third quarter, it fell nearly 38%. So we had very oversold big cap banking stocks. And I think what we've seen is a rebound. We saw the Q3 numbers come out. They were reasonably constructive. And that's why we've seen this sort of rally back in the banking stocks. I still think that there's a little bit more room to test the upside in the big ones like Barclays, KCB, Equity, for example.
Athi River Mining coming out with its numbers yesterday for the third quarter, 61% drop their 9-month pre-tax profit due to that 681 million shilling provision. Now, of course, this won't impact cash flow as it's unrealized foreign exchange loss. But unfortunately, with that weaker shilling and accounting policies, you know, that's the way the cookie crumbles, and really not crumbling in Athi River Mining's favor.
No, I think, you know, this was the first evidence of what the vicious downdraft in the shilling might do to those companies which are borrowed overseas or in foreign currency. And it's interesting that Athi River have taken it on the chin. I don't see them recovering this entire provision. I think the shilling is very unlikely to get back to those levels that we were at for so long, or just below 80 or around the 80 level. I think realistically we can get back to 88, and I don't know whether Mark was done on this loan, but I suspect they can take back 50% of the provision. East African Portland Cement is another cement company with a very big loan outstanding in the yen. And the yen-shilling pair is probably the pair that's moved the most in the global markets in 2011 against the shilling, of course, so they're going to have a problem as well. But we're going to see, I think, more and more of this type of result where we're seeing the currency moves start to hit the bottom line.
Yep. Just quickly back to Athi River Mining, and from the operational fundamental side of things, 37% drive up there in the growth in top line earnings. They're building on efficiencies, margins are stable, they've got Tanzania coming online. The company is solid and on the growth path.
Absolutely, it's an extremely well managed company. Pradeep Rana has a significant stake in the business. He understands what makes the share price tick. It has low beta. It typically doesn't follow the market much lower when the market turns south. And I think, you know, they're well positioned to ride the construction cement boom in the region. You've got a low base effect, which also makes it attractive. And you've got all that capacity coming on stream in Tanzania. You've had a purchase of a cement operation in South Africa. Pradeep's got big ambitions, and if you want to bet on somebody delivering them, you might as well bet on him.
Very quickly, is 169 shillings attractive for Athi River Mining?
I would be buying it on pullbacks. I think, you know, let's see how the market reacts to this FX provisioning over the next couple of weeks. I wouldn't be chasing it up here, but it's a sort of stock you've got to keep an eye on, because you've got to pick it up when it's down, and you don't really get big lots. It's thin. There's also a trade-off, a convertible option on the back of it. So, you know, a lot of supplies out of the market. It's a thin float.
So wait for a pullback and then buy into the stock. Thanks for your insight this morning, Aly-Khan.
Pleasure.
Satchu, CEO of Rich Management.